Hello, everyone, and welcome back to Frost and Sullivan's Growth Podcast. If you are new here, this is where we unpack the mega trends reshaping industries, markets, and the way decisions get made. Today, we're talking about something every investor, from private equity to corporate M&A, is thinking about right now: how commercial due diligence is changing and why the old playbook just doesn't cut it anymore. So buckle up, because the world of diligence is shifting fast.
Let's start with the big picture. For years, commercial due diligence was mostly about validating what you already believed, checking market size, confirming assumptions, making sure revenue projections weren't overly optimistic. But in today's world, that's nowhere near enough. We're dealing with faster technology cycles, geopolitical uncertainty, and a massive push towards sustainability. Investors aren't just asking, is this market big enough? They're asking, will this market even matter in 5 years? That's the shift from validation to foresight, and it's redefining what good diligence actually looks like.
Here's the thing. Financial and legal diligence tell you what happened yesterday. Commercial due diligence is supposed to tell you what's coming tomorrow. But too many diligence processes still rely heavily on historical data. And in a world where disruption is the norm, that just doesn't work. Think about it. Past performance doesn't equal future growth. Industries can be disrupted overnight. ESG is shaping what gets funded. New business models appear out of nowhere and scale instantly. So next-generation CDD takes a different approach. It's not a backward-looking audit. It's a strategic intelligence engine, one that looks outward, forward, and across megatrends to help investors make decisions with confidence.
So what's actually driving this transformation? Frost & Sullivan highlights 4 big forces. 1. Technology is rewriting every industry. AI, automation, digitalization, they're shifting competitive dynamics everywhere. Today's diligence needs to map both the current landscape and the one forming on the horizon. 2. ESG is now non-negotiable. Capital is flowing toward sustainable, resilient businesses. Diligence has to evaluate whether a company is aligned with these long-term expectations. 3. Geopolitical risk is real and constant. From supply chain bottlenecks to shifting trade rules, investors need scenario planning built into their diligence. 4. The old predictability is gone. You can't look at last year's numbers and assume anything. It's all about adaptability and forward modeling now. These forces aren't subtle. They're rewriting the rules of investment.
So how do you bring rigor and foresight into diligence? Frost & Sullivan's whitepaper lays out a 5-pillar model, and it's very practical. 1. Go beyond basic market sizing. It's not just TAM-SAM anymore. It's expert insight, real data, and a hunt for hidden growth adjacencies. 2. Listen to the customer closely. Customer sentiment, loyalty, switching behavior, this stuff is gold. It's one of the best predictors of long-term strength. 3. Map disruption, not just competitors. Who's strong today? More importantly, who's coming tomorrow? 4. Stress test the business model. Supply chain resilience, scalability, operational weak points. Investors want to know if the business can withstand real-world shocks. 5. Connect it all to the financials. Insights only matter if they translate to EBITDA, valuation, and growth potential. This isn't just diligence, it's strategy.
Here's a big mindset shift. Leading investors don't see CDD as a one-off anymore. They use it across the entire deal lifecycle. Before the deal, to spot valuable targets early. During the deal, to build conviction and avoid surprises. After the deal, to inform 100-day roadmaps and value creation plans. Before exit, to craft a compelling evidence-backed story. So instead of diligence ending when the deal closes, it actually accelerates the whole investment journey.
Today's investors are drowning in data. The real advantage lies in connecting the dots. That means combining supply-side intelligence, customer-driven insights, scenario-based forecasting. Put those together and you get a full view of not just where a company is today, but where it can go and what might disrupt it along the way. That's real deal confidence.
As firms shift from being capital allocators to value creators, CDD becomes a core strategic capability. Investors who embrace this new approach are seeing higher deal success rates, more disciplined valuations, faster decisions, stronger, more resilient portfolios. And Frost & Sullivan partners with investors across every major sector, from digital infrastructure and industrial tech to mobility and healthcare, helping them build conviction and uncover growth.
So here's the bottom line. The future of commercial due diligence isn't about checking boxes. It's about predicting where markets are heading, assessing resilience, and giving investors the confidence to make bold moves. Frost & Sullivan's latest white paper, From Insight to Investment Confidence, lays out the full framework, plus case studies and actionable tools you can start using right away. If you want to rethink diligence for the modern investment landscape, this is where to start.
Thanks for tuning in to Frost & Sullivan's Growth Podcast. To dive deeper or download the new white paper, head over to frost.com or email us at hello@frost.com. We'll see you next time with more insights to keep you informed, confident, and growth ready.